Okay, this problem starts out by giving us two income statements, one that's unadjusted and one that's adjusted. And when I say adjusted, I mean adjusted for things that were accruals, based on accrual basis accounting, that we need to change. For example, our first change, starting at the top, is going to be fees earned. Fees earned that were unadjusted for things were $24,000, and the adjusted amount, or the correct amount, was $30,600. That's a $6,600 difference. It says up here that 30% of the $6,600 adjustment for fees earned has been earned but not billed. That means to get that's a total of $1,980, and we're going to debit accounts receivable, and we're going to credit fees earned for $1,980. So what I'm saying is that between this unadjusted amount and this adjusted amount, we had some additional work we did for somebody, and we billed them and sent them a bill. We didn't collect the money immediately, and that amounted to a total additional fees earned of $1,980. That was that piece of this difference. We have a second piece that amounts to $4,620 that was for, it says up here, and the other 70% has been earned by performing services that were paid for in advance. And what this means is we got the money a long time ago. We debited cash and we credited an account called unearned fees. And now we've earned up to, in this case, $4,620 of this. And so we're going to take it out of the liability account and we're going to put it in this fees earned, which is a revenue account, because we've earned it. So the $1,980 and the $4,620 account for the total difference here of $6,600. So our adjusting entry is going to be to debit fees, unearned fees, which is liability, and credit fees earned, which is the revenue account. So these two things make up the adjustments, or the changes, that will take us from the unadjusted to the adjusted amount. Let's go on to the next one. You can see that commissions earned have not had any changes. That's the second item down there. Let's see, let me get my cursor back here. I can't find it. Where's my cursor? Help. Slow down a little bit here and see if I can find it. Oh, there it is. It didn't change any from the unadjusted to the adjusted, so I'm not going to need to make any changes there. So now we're on down to this next item, which is depreciation expense. And looks like we didn't take any depreciation on our unadjusted income statement, and we took $1,650 worth of depreciation on our adjusted statement. So let's make an adjusting entry. We're going to debit depreciation expense computers for $1,650, and we're going to credit accumulated depreciation computers for $1,650, and that takes care of that, $1,650. Same thing with the $1,925. We're going to make a depreciation expense entry for office furniture for $1,925, and we're going to credit accumulated depreciation for $1,925, and that takes care of that piece. Then we have salaries, which started out as an unadjusted amount of $12,500, and now it's $15,195. So that's a difference of $26,995. We will debit salary expense and we'll credit salaries payable. Remember, these are the entries that would be most likely recorded if you had a difference between unadjusted and adjusted amounts. And so that's our salary expense entry. Next we have insurance expense, went from nothing to $1,430, and that's going to be a difference of $1,430, and that's going to be insurance expense, a debit for $1,430, and a credit to prepaid insurance for $1,430. Next we have rent, went from $3,800 to $4,500, and that's going to be a most likely adjusting entry of $700 for a debit to rent expense and a credit to rent payable. Next, office supplies expense was $0, now it's $528, and that's going to be office supplies expense, a debit for $528, and a credit to office supplies, the asset account, for $528. Then we have a difference of $500 between the unadjusted and adjusted amount for advertising expense. So we'll have advertising expense debit for $500 and a credit to advertising payable for $500, and that takes care of that difference. And then looks like the last thing we've got is the difference in utility expenses of $77. So we'll have a debit to utility expense and a credit to utilities payable, and that makes up all of our our adjusting entries to get from the unadjusted amounts to the adjusted amounts. And I believe we're done with this problem.